You have exactly 14 days before the biggest financial shift of the year hits this market. The United States government just made a historic announcement. They told the world that this token is a basic digital commodity. It is now in the exact same legal category as wheat. It is in the same category as physical gold. It is the same as crude oil. The agency that regulates Wall Street completely removed the legal cloud. They put this in writing on March 17th. This is the exact news every single holder has waited 5 years to hear. But the price did not explode. It actually dropped. The token is currently struggling around $1.42. Retail investors are angry. They are confused. They are wondering why the biggest victory in history triggered a red candle. So let's break it all down. We need to look deeper than the surface headlines. The real story is what the company behind the network is doing right now. Ripple is the software company that builds the infrastructure. They did not celebrate the legal victory. They went straight to work. On that exact same day, they launched a massive digital banking platform. They did not launch it in America. They launched it in Brazil. This is a critical detail. Brazil is the absolute financial engine of South America. It has over 200 million people. Their banking system processes billions of dollars every single day. Ripple is not trying to get regular people to trade coins. They are signing contracts with giant financial institutions. Banco Genial is already on board. Brasa Bank is testing the systems right now. They are preparing to move massive amounts of money across global borders. They will do it instantly. They will do it for fractions of a penny. This is real global utility happening in real time. Now, I spent 3 hours in the on-chain data before this video. Here's what I found. The blockchain never lies. It records every single transaction publicly. We can see exactly what the smart money is doing. Let me walk you through what actually showed up on-chain this week. First, we look at exchange-traded funds. We call them ETFs. These are investment funds that trade on normal stock exchanges. They allow regular people to buy this asset through a standard retirement account. You do not need a digital wallet to buy them. When the government cleared the legal status, these funds exploded. We saw $1.4 billion enter these funds in just 3 days. $1.4 billion. That is more money than the entire economy of some small island nations. It shows massive demand from traditional Wall Street investors. We also need to look at where the actual tokens are sitting. This is called exchange reserves. The reserves on Binance tell a massive story. Binance is the largest trading platform in the entire world. Last summer, they held $10 billion worth of this token. Today, that number has collapsed to $3.9 billion. Large investors are pulling their coins off the public platforms. They are locking them in cold storage. They are refusing to sell them at these low prices. Mark Hendrickson is a senior analyst at Galaxy Digital. That is a massive institutional investment firm. He looked at this exact data. He projects the price will reach $2.20, but it only happens under one specific condition. The price must break and hold above $1.50 first. Before you screenshot those numbers and share them, you need to see what comes next. Here's where I have to be honest, even though it's not what most holders want to hear. That $1.4 billion inflow was impressive, but it stopped completely. Over the last 4 days, the trend reversed. We actually saw $45 million leave those exact same funds. Big money took a quick profit and stepped away from the table. So to recap, the legal status is finally clear and billions are flowing in, but the short-term money is already taking profits. Now let's talk about the force that's actually controlling all of this. What I'm about to show you is the reason your portfolio has been bleeding, and it has nothing to do with XRP. Now I need to be straight with you about the elephant in the room. We have to talk about the Federal Reserve. They are the group of people who control the cost of borrowing money in America. They held a massive meeting on March 18th. Here's the sell pressure that nobody wants to talk about. They took a vote. 11 members voted to keep interest rates extremely high. Only one single person wanted to cut them. They locked the base rate at 3.5%. This is terrible news for digital assets. High interest rates mean investors can get safe, guaranteed returns from government bonds. They do not want to risk their money on crypto. Why did they refuse to cut rates? Because of the global oil market, there is a major conflict happening in the Middle East right now. This conflict is pushing the price of Brent crude oil above $88 a barrel. When oil gets expensive, shipping gets expensive. When shipping gets expensive, food and goods cost more. This is inflation. Wholesale prices, the prices businesses pay before you see them in stores, are jumping rapidly. The government just announced they expect inflation to hit 2.7% this year. That is much higher than they wanted. As long as oil stays expensive, the Federal Reserve will not lower interest rates. They will keep the pressure on the entire financial system. So look at the complete picture. We have clear legal status. We have billion-dollar institutional demand. We have massive banking deals in Brazil. All of those facts are incredibly bullish, and yet the price is stuck at $1.42. Fundamentals set the destination. Macro sets the timing. Let's look at the actual network activity to understand the supply. The daily transactions on the ledger are holding steady at 2 million per day. People are actually using the network to move value, but we also have to look at the escrow system. This is a locked vault of tokens that releases 1 billion new coins every single month. Ripple routinely locks 800 million of those coins right back into the vault. They do this to protect the market from being flooded with new supply. And here's what makes this complicated, because if it were simple, the price would already be higher. We have to face the technical reality on the price chart. The market is full of sellers waiting to escape. XRP has to run a gauntlet, 3 levels, each thicker than the last. The first massive ceiling is sitting exactly at $1.50. This is tied to a major moving average. Computer algorithms are programmed to sell heavily at this exact number. If we break through that, the next brutal wall is at $1.68. Thousands of retail investors bought at that exact price during the last rally. They have been losing money for months. The second the price gets back to their entry point, they will sell just to break even. That creates a massive invisible wall of selling pressure. Every time the price goes up, these tired holders push it right back down. That's the full picture, bull and bear. Now let me give you the playbook, all right? Let's make this actionable. Information without a plan is just noise. You need to watch 4 specific things over the next 14 days. Signal 1. Watch the daily institutional fund flows. You can find this data for free online. Wait for 3 consecutive days of positive money entering the funds. That proves the smart money is buying the dip again. Signal 2. Watch the price of crude oil. It is the master key to everything right now. If oil drops below $80 a barrel, inflation fears will disappear. The Federal Reserve will finally feel safe to cut interest rates. Signal 3. Watch the daily price chart at $1.50. Do not get excited if the price touches it for 5 minutes. You must wait for a full 24-hour candle to close completely above that line. That proves the buyers are truly in control. Signal 4. Watch Washington for the Clarity Act. This is a massive piece of legislation heading for a final vote in April. Brad Garlinghouse, the head of Ripple, believes there is an 80% chance it passes. If it does, American banks will finally be allowed to hold these digital assets on their balance sheets. If these conditions are met, a massive supply shock will trigger. The price will aggressively target the $2.20 level projected by analysts. If oil spikes higher and the government panics, expect the price to drop fast. It will likely test the strong floor waiting at $1.12. You don't need to guess, you just need to watch these signals. So let me bring this all together. The underlying technology just got the ultimate green light from the United States government. The legal war is completely over. The institutional banking rollout has officially started in South America. But short-term price action is being crushed by a terrified Federal Reserve and exploding oil prices. This creates a massive compression zone. The longer the price stays down while the foundation gets stronger, the harder it will snap when the macro environment finally clears. I'll be covering every development, the fund flows, the oil prices, the legal votes, every single day on this channel. Tomorrow, I will show you exactly what happens when the massive options contracts expire on Friday. I'll have the numbers, I'll have the breakdown. Don't miss it. The difference between prepared and unprepared has never been this clear. This content is for informational and educational purposes only. It is not financial advice. Always do your own research before making any investment decisions. Until next time, stay sharp, stay informed.